Thank you all for joining us today, and welcome to Driving Profits in Your Business webinar. I'm excited to have you here today and to be able to teach you a little bit about what we're passionate about and being intentional in your business. This webinar is going to explain a very simple cash management system that you can start implementing in your business even today. The methodology behind it has been a game changer for tens of thousands of businesses, and I am so excited that we are certified in it and that I'm able to teach you the basics today. Let's go ahead and jump into the fun stuff. Owning a business is rewarding and stressful, as I'm sure all of you know. There are many reasons that people start a business. A passion or very strong interest in whatever their goods or services are. Might be looking for a more flexible schedule, or they're recognizing an opportunity or a need to fulfill in the community. Some people want more independence. Maybe they want to leave a legacy to their family. And some people want to create jobs. Are there any other reasons that you started your business? Unfortunately, often we have the excitement of starting a business. The difficulty isn't always considered. The difficulty of making sure you're paying yourself, of finding those sales, unpredictable cash flow, just the basic behind the scenes thing of running a business. You started your business for whatever the product or service was, and the behind the scenes stuff is a lot more time consuming and more difficult than maybe you had anticipated. So many small business owners just pour everything they have into their business, live it night or day, and in that, they don't take care of themselves. And so you hear people say, oh, my business is my baby. I don't look at it that way. Actually, I think your business should be your workhorse. It should work for you and not the other way around. And it is so very important that business owners support themselves, their families, their lifestyles, both financially and emotionally. Many business owners let these needs slip to the side. They just get so all consumed. And we really want to flip that around and make sure the business owners are taking care of themselves. From the beginning of starting any business, the owners are contributing time and skills and efforts, and they need that personal financial stability for themselves and their families. They need to be able to pay themselves. Being able to do that from the beginning also helps provide that motivation to keep going and boost morale. And it's important that you have those financial means to not only support yourself, but also to invest in your own personal growth going forward. All of these reasons is why having a good cash management system is so important. We are going to talk about some things today to make sure that the business is taking care of the owner. And I want to make sure that you walk away with some not only valuable information, but valuable tools. And so at the end of the presentation today, we will be giving you access to some tools. So please make sure you stay to the end so you get all the content and you'll be able to walk away with this stuff to help you implement what we're talking about in your business starting as soon as we're done. There are three main goals today. We want to show you how to understand where the money in the business has been going. We want to create a customized roadmap to ensure that there's permanent profitability in that business. And then we want to teach you how to follow the map to keep your business on the road to profitability. Now, why does this matter? If a business implements the strategies that we discussed today, it will stop burning through money. Money goes out the door so easily when we're not paying attention to it. And this system will provide you the clarity to know where your money is going. And that clarity will then turn your business into a cash making machine and will greatly boost the owner's confidence and allow them to experience what success feels like when a business is working for the owner. As an example, even in our firm, after implementing this system, even as accountants, right, my revenue increased in the first 18 months 70%, and my profits rose 200%. Just being mindful makes a huge difference. A little bit about me. I'm your guide today, Carla Ruble. I started CFO Accounting Services because I have always loved small business. The second I started working for one, it's like just where I felt at home. Made sense to me. Small businesses make such a huge impact on our economy and the benefits that they provide the owners and their employees. My background was in accounting. It's what my degree is in. So I just figured that the best way that I knew to be able to support small businesses and help them thrive was by providing the bookkeeping, the services, and the knowledge and the expertise that the larger corporations have on staff. If I can do that in a fractional portion to a lot of businesses, I just felt that was my best way to make the most impact. A couple of years ago, we became certified in profit first methodology. So we are a profit first professional firm, and we were named Rookie Firm of the Year in 2023. So that was fun. The Profit First system provides a simple behavioral based cash management system. So it works with our natural tendencies and habits to really help that business owner pay themselves a sustainable living wage and intentionally build in profits to their business. Recently, we were elevated to the top tier of Profit First. So that's exciting because it'll give us even more tools and more resources and more ideas to be able to support small businesses even more. As I alluded to in the last slide, it has been a complete game changer for our firm and for several of our clients that we work with that really embraced it. I'm excited to show you the system today. This is old school. Probably your CPA is probably most people you talk to, right? Everything. You have sales and you have expenses, and what's left over is your profit. If you look at your year-end income statement, it may show a profit. Your CPA might tell you, oh, congratulations, you had a great year. However, that doesn't always flow through to the money left in the bank account. If this equation that was made up by whomever so many years ago was the best way to run a business, why do so many businesses fail? I think we need to look at that. Cash flow issues are among the top reasons that small businesses struggle. And in fact, 82% of businesses fail because of cash flow. It's not the sales, it's not maintaining the right balance and knowing where that cash is going. And without cash management, businesses struggle to pay their employees, to struggle their vendors, and to pay the owners because they're always the last person that has money to come out of the business. So a cash management tool is absolutely critical for the survival of a small business. A cash flow system keeps us in tune with how the business is spending its money, and it provides the clarity needed to understand where that money is going. And it's a necessity if you're planning on growth in your business. Cash flow system makes sure that we're being deliberate with every dollar, and so it doesn't slip away. So we're going to flip this, and we're going to create a new formula, and that is our sales minus our profit will then equal our expenses. As a business owner, very important from the get-go, take some profit first. Now, I know some people, when they hear this, they think it sounds very greedy and like, oh, that's not me. With profit, you can provide better benefits, vacation, paid medical leave. The profits are where you're going to get the money to upgrade equipment more frequently, which then is making for a safer and more pleasant environment for your employees. With the profits, you can sponsor a Little League or sponsor wells in a third world country, and you can give back to these communities and projects that you are passionate about. So if you really think about it, profit first equals people first. It takes that profit in your business to run everything else. And only a sustainable business can put people first. And the profit first methodology keeps businesses sustainable. After the profit is taken, the company will survive and thrive on the rest. The cash management system we're teaching is based on this formula completely. It works with human behavior in multiple facets. Having this profit, paying attention, having this clarity, it releases dopamine and it encourages that positive behavior to continue. And it helps us avoid Parkinson's law. And it lets us reward ourselves for all the hard work and all the stress of starting this business. It's rewarding ourselves, and the business will run and thrive on what's left. Now, I mentioned Parkinson's law. Raise your hands, put in the chat if you've ever heard of Parkinson's law and know what it is. If you do, please bear with me because I'm going to take a few minutes to explain it. Parkinson's law basically states that we will spend whatever we have allocated to a project or to an activity. This works and is true with either time or money. If you allocate 4 hours to something or 2 hours, that's how long it will take you. If you allocate $1,500 to a project or $500 for a project, you'll figure out how to get that project done in that dollar range. That's what this whole system is going to help you stay around that Parkinson's law. Traditionally, most businesses have one, maybe two bank accounts. They might have a checking account and a savings account. But when all the money goes into one account and you check that balance, seeing a balance that is higher than normal, it's really trending in the right direction, then Parkinson's law. And you might think of all the other items that you've needed, the computers you need, or wouldn't it be nice to have this? And next thing we know, that money's gone. And we have forgotten about the insurance premium for the next 6 months that's coming up, or that this month has 3 payrolls, or whatever those things. When it's all commingled, we lose track of what's really going on at a glance. The cash management system combats this tendency because we divide up our money into multiple bank accounts, each of them with their own specific mission. So when you look at those counts, you know that money, you have intentionally set it aside for a specific purpose. When the balances are smaller and we know what their intended purpose is, we're going to leave those aside and we're going to make better decisions. Another thing that people don't think about is how much our businesses would save if you took advantage of paying for a full year of subscriptions or for your insurance. There are many annual subscriptions that if you can pay for it in the entire year up front, you're only paying for like 10 months worth instead of the 12. That alone, if you have that money available, is a 20% increase in your profits. So the Profit First framework is a premier cash management system that will bring clarity to your business financials by the multiple bank accounts. Here's the 5 accounts that we recommend. We call these the 5. And with these accounts, we can combat that tendency of Parkinson's law to use everything that's sitting there. How this works is the income account is your serving tray. It's where all of the money goes from all of your stuff. Then we suggest a couple times a month. I know a lot of people who do it weekly. You take everything that's in that income account, and based on the percentages that you have decided that is customized to your goals, your plans, your business, your habits, we work and get a percentage that you move those percentages from the income to these other 4 accounts. I know that this may sound like a lot and can sound a bit overwhelming and complicated when it's first introduced, but just like every habit, once it's established, the rewards will far outweigh the initial discomfort. I was talking to somebody last week who has implemented this 4 or 5 years ago, and tax time used to be hugely stressful. A lot of small business owners literally extend their tax returns just so they don't have to face like, where is the money going to come from to pay the IRS? It's not stressful anymore when that money is just sitting there. In fact, he said his tax account ended up having like $20,000 more in it than he needed, which then meant he had more to expand his business and put it in his profit, share it with his employees. And he wouldn't have had that if they had just been mixed up in one account. When you implement the system fully, 3 of the 4 accounts is for the benefit of the owner. A lot of people use their profit account to share with employees if they have it, but it's really making sure that everything outside of the business is taken care of. And then what's left is what you figure out what the business needs to operate and if the expense is really a necessary expense or not. The next few slides, we are going to do an assessment of a sample business. I believe everybody should have gotten an email. However, I did discover last night that the income statement had an addition error. We have put the information in the chat if you want to pull it down there, or if you want to take a picture of this QR code or use this link, it will take you to not only the workbook, which we will be using for a couple of pieces of the assessment. And I want you to have this stuff so you can do the assessment on your book when we're done. But this QR code will take you to the workbook and the sample financials that we're going to be using. Here is the sample statements that we're going to use to complete the assessment today. The income statement, I recommend when you do it for your company, do it for the most recent 12 months, even if it's not your fiscal year. Make sure they are on a cash basis. So ones that I'm doing for people right now, I would just do it from October 1st of last year through September 30th of this year. Don't let yourself get caught up in the minute details. This is a starting point, so you have a basic idea of what your business has been doing while it's been on autopilot. I do recommend when you run the profit and loss income statement, same report, that you add a column that gives you the percentage of your total revenue. It'll just help when you do the assessment, have those numbers. It'll help you decide where to put them. And I'll explain that a little bit more here. And in the balance sheet, run it for the current time period, add a column for the 12 months prior to that, and a column for the difference, especially if you have loans. If you have contributed money, this makes it a lot easier to know what happened during that 12 months that we're analyzing. If not, you just have the total. Your balance sheet is cumulative numbers of the entire time you've been doing your accounting, which hopefully is the entirety of your business. I'm going to go through the numbers that we're going to put in the assessment here while you're looking at the income statement. Our assessment starts with total revenue, which is going to be everything in your goods or services, everything on the top. That's total revenue. And then we're going to deduct what we call materials and subs. And these are not always all of your cost of goods sold. Figure anything that's like 20% or more of your total income, they're not as negotiable. You have to worry about if you have specific suppliers or different subs, you're sort of at their mercy. It's probably not an area that you can really cut corners. So we're going to take that off the total income first, because that's going to leave us what we call our real income, which is really what's left over, and you have more control over what you do with that money. So in our example, our total income will be the $685,423. If you look at our cost of goods sold, the only thing that we're going to consider mats and subs is our materials, because they equal over 20%. I forgot to mention this. Employee wages are pretty discretionary, so we are not going to remove those. Our employees are completely in our control. We're leaving that as an expense of the company. Our mats and subs number will be the 236. Doing the math, our owner's compensation, this one gets a little tricky. It is wages, draws that the owner takes, and expenses that might be 100% for the business owner. They're completely deductible when you do our taxes, but for this exercise, they are truly something that is completely discretionary and that the owner can control. In this example, I'm using the automobile expenses. Usually the cell phone is for the business owner's benefit in their wages. A couple other things that a lot of times are really for the benefit of the owner more than anything else would be travel. I could have thrown that in there. A lot of times in meals, especially if the owner's not taking prospects out, a lot of times we'll add those into the owner's compensation number. So in this situation, in this example, I should say our owner's compensation will be $99,626. You don't have to write all these down because there's a chart that will show it to you. And then everything else that's left over, including any loan payments on the balance sheet, will be part of the operating expenses. We're going to go ahead and look at the chart. This is the assessment based on this financials. Top line 685, mats and subs 236. This real revenue is the important number. This is what we consider what you have left over to run your business. Most people, if it's their first assessment, unless they have deliberately already been setting aside money for a profit, and this wouldn't be your savings account. This would be like, I am intentionally leaving this. I knew I was going to spend this as profit in the business. If you're not doing that, the profit would be zero. And tax most of the time is zero. If a business has been able to pull money out of their accounts to pay the taxes, go ahead and put that money in. Any money you've saved or paid for taxes. But it's very, very common for those both to be zero. Owner's comp is $99,000 and the rest of the operating expenses is $325. This column is our caps. That is current allocation percentages. That is mathematically whatever number is in the actual column divided by real revenue. So 0, 0, the owner's comp is 22%. The operating expenses is 73%. And you'll notice these do not add up to 100. It's very common. A lot of times they'll add up to over 100. If a company has had, depending on the time frame, perhaps they were pulling money that was already sent in the bank account. So it wasn't really based on revenue for this time period. It could be over 100. Don't worry about that. Also, don't spend a lot of time just really getting into the weeds of where it should be considered. The important thing is to have a close number, but don't get all tied up in the details of this. The next column of worksheet is the TAPs, and these are target allocation percentages. It's the percentages that ideally you want to try to hit. Most companies will take 4 to 6 quarters because we want it to be a slow transition, and we'll talk about that a little more in the future. These percentages on the next slide, you'll see where they come from. They are based on ranges of businesses across all kinds of industries, thousands of businesses. Again, it's a target. It's, overall generalities. It certainly can be tweaked for your specific situation, but it's a good starting point. The PF dollars, this column, is 10% of your real revenue. So this is the target in dollars instead of a percent. The bleed column is the difference. You take this less the actual. This is how much that you have to change in that area. If this is positive, we need to increase our savings or spending in this area. And if it's negative, it needs to be decreased. So in this sample, the big area of concern is the operating expenses. Ideally, a company of this size would be spending about 40% of its real revenue in expenses, and we're at 73%. Sounds a little scary, but I will say that most people, if you really look at your subscriptions and where your money is going, it's fairly easy to cut off between like 3 and 8% within the first couple of quarters. This is a chart, and this is all in that workbook, so you will have this information. This is how we figure out what your TAPs are. So real revenue between 0 and 250, these will be your targets. 50 to 500, which we were at with the 4, is these percentages, and so on. Now, ideally, as you're implementing this revenue keeps going up, and these will be changing. If you may have any questions, kind of a lot, not seeing much in the chat. Okay, this is our roadmap. This is what you're going to use to reach your target allocation percentages. It's very, very important. You are not going to be able to take 73% OPEX and just decide to go through and cut things till you get to 40. Not sustainable. So as you can see from this chart, that after the end of the first quarter that you've implemented, we want to be saving that. We want to be paying the owner's compensation, increase that by 3. I do strongly encourage, especially this 1% profit, we'll talk about this, that you do take that off the top. It's like a 401k plan. You take 1% of your real revenue and move it to an account. You're not going to miss that. And this is just a huge, huge mental boost to the owner to make sure that is sitting there and seeing what it goes. At the end of the first quarter, it may be a dinner out, but by the end of the 6th quarter, I know people who are taking their entire family on 2-week vacations. It's just very important to get started somewhere. From this chart, as you can see, I am not advocating for giant changes. And as you are being more mindful with what your operating expenses are, it's really just kind of natural to have surplus building up in that account to then be able to reallocate to the other 3. So you're reaching these targets just by being mindful and not because you're making any drastic changes in a very short period of time. I know people who like to save their profit account, but we really strongly encourage. So spend this money, at least half of it. What we suggest is if there's a lot of debt, take half the profit and pay it towards your debt, but use the other half, some of it, to do something good for yourself. Now, quick recap. You have to know where you are now to know where you want to go. So it's very important to take the time to do this assessment. Just take the 15 to 30 minutes to get something down on paper. The powerful thing about these tools is that they do lead to lasting transformation. This isn't something that you'll do once and say, oh, that's nice. If you want more cash flow, more financial security, more profit, if you want to experience the true rewards of having a business that services you, then you need to implement this framework. And if you want new results, you have to take new actions. I always say 25% of something is still more than 100% of nothing. So just make a promise to yourself that you're going to take new actions. At CFO Accounting Services, we help people implement Profit First, as we've just described, but we can help improve your businesses in many other areas as well. We really love to look into your overall plan for your business, what your goals are, what your cash flow is, what your exit plan is, what your plan is for profitability. Some people just want to get to a point to sustain themselves, and others have very large growth intentions and desires. And we want to work with the business owners individually. It's not black and white. It's what can we do to support you in the areas that you need support. We've developed a lot of tools that can help you assess and really find the trouble spots and untapped opportunities to get you on the path to accelerate that cash flow and profitability and to meet your goals. I went through a lot today. I have probably talked quickly. And my whole goal is that you can take these resources and tools, and put them into action. But if you're serious about improving your cash flow and you really want someone to walk along with you, we can help you and support you in implementing these guidelines. If you're not sure if that's the route you want to take, I highly just suggest that you scan this QR code. It'll take you to our webpage where you can book a 15-minute discovery call. It's completely free, no strings attached, no pressure. I'm truly in the business just to support the business owners. If you have questions when you're going through your assessment or you want to talk about your goals, whatever, please use that link to schedule that 15-minute call. It's completely free, and I would love to get to know you more and see what advice I can give you with that. Now, also, while you're on that page, you can download our free tools. We are giving away our cash flow optimization playbook that has a different type of more all-encompassing business assessment tool at the end. And we also have the quick assessment. This is the chart that was in the presentation. It will show you the fields to enter the numbers, and it will do a lot of the calculation for you. So it'll make that assessment super easy. Get your financials, fill in just numbers, and you will have your targets to hit off of. The chart that I showed you earlier with the different target allocation percentages, the TAPs, that is in that workbook. I forgot to mention in the workbook, there is a page that helps you determine key expenses that many times are the benefit of the owner. There is a checklist and it'll give you an idea of one of those expenses to look at. You can scan this QR code. It'll take you to these downloads. And at the bottom of that page is also the place to schedule that call if you would find that beneficial. If you want to do it on your computer, you can use this URL. It'll take you to the same page. Mahatma Gandhi said, the future depends on what you do today. So today is the time to start looking forward to the beauty ahead that is this business you started. We cannot change our past, but we can still change our future. It is never too late to get started. If you have any questions, if there's anything you'd like me to show again, we have some extra time. Thank you so much for coming today. And if there's ever anything you have questions, here's our website. Feel free to send an email and just reach out to us because we're here to support the small business owner.